Right now, one single line on your last tax return is quietly deciding what lands in your bank account this month, and most seniors have no idea it exists. Welcome back to Canada Finance with Alex, the channel that helps you understand exactly what's happening to your money before the government does. I'm Alex, and today I need to show you that number. It's not a phone call from Service Canada, it's not a letter, it's one line on your tax return. Line 23,600. And if it moved even slightly from last year, your guaranteed income supplement, your old age security, or both could shift without any warning at all. I've heard from seniors who were genuinely panicked because their deposit came in $200 lighter than the month before, and nobody had explained why. So today I'm breaking down exactly what line 23,600 is, exactly what it controls, and exactly what you can do right now to protect what's yours, and stick around, because the fourth thing I'm covering is the one almost nobody checks, and it's usually the reason a senior's GIS quietly shrinks without them ever knowing the cause. Line 23,600 is simply your net income for the year, everything combined, your CPP, your OAS, RRIF withdrawals, workplace pension income, investment income, even taxable capital gains, minus certain deductions. Service Canada pulls this number fresh every single year to decide what your GIS and OAS should look like for the next 12 months. So if your RRIF minimum went up, if you sold investments, or if a bit of part-time income came in, that number moved, and your payment moved with it. OAS gets a small automatic inflation bump every quarter regardless of income, but GIS works completely differently. It's fully recalculated once a year off the return you just filed, and that recalculation usually starts flowing through in July, though processing delays can push the change into your August deposit, which is exactly why so many people notice it then. Picture a senior who takes a slightly larger RRIF withdrawal 1 year to cover a home repair. That bump becomes the number used to calculate GIS for the entire following year, even though real day-to-day income already went back to normal. The GIS drops, the deposit shrinks, and unless you understand this lag, it looks like the government simply cut you off for no reason. Here's the scale we're talking about. Current maximum OAS sits around $752 monthly for seniors 65 to 74, and about $827 for those 75 and up, and that part is automatic. GIS is the piece tied to line 23,600, and pushing your reported income up by even a few $1,000s can drop your GIS by more than most people would expect. On the higher end, the OAS clawback kicks in once net income crosses roughly $93,000, taking back 15 cents of every dollar above that line, and it disappears entirely past around $154,000. Same trigger line, both directions. Now here's the part almost nobody checks. TFSA withdrawals never appear on line 23,600. Pulling money from a TFSA has zero effect on your GIS and zero effect on your clawback, while pulling the same amount from an RRSP or RRIF is fully taxable and can shrink next year's GIS or trigger part of the clawback. The sale of your principal residence doesn't count either. So before any large withdrawal, check where you're pulling from. Request your notice of assessment to see exactly where you stand, and if you're married, look into pension income splitting with Form T-1032 to shift income to the